Give us analysis. We have Michelle Schneider, Chief Strategist at Market Gauge. Michelle, I want to get your take first on that Intel deal. We heard about the risks from the company, but some would argue that government support of some kind is needed to support key industries such as chip making. But in your view, is increased involvement in this matter a catalyst for private business or more of a risk?
Well, I heard Mitch use the word controversial, and certainly that is a word that follows Donald Trump, and this is no exception. What makes this a departure is it's one thing when they were doing grants and giving money for the CHIP Act to Intel. That was really outside of the governor's purview in terms of ownership. But when you have government ownership, basically, what is the government? We have to remember taxpayers, which means now taxpayers own a large percentage of Intel. And that means that we need to see the stock do well. So the risk is that the stock and the company doesn't do well, and it turns out to be a big loss. Now, it's not the first time he's done something similar to this, because he's talked to Nvidia about wanting a 15% stake in any revenues they get from China. He's talked to Apple about putting money here. He was involved with U.S. Steel and the Japanese deal. So I guess really the bigger, I think, concern for Americans right now is how far-reaching does the government want to go into business, and where does the divide get fuzzy, and then what does that actually mean for the borrowing that the government does if it cannot be repaid and are already high spending in debt. That remains to be seen, but those are certainly the risks.
Yeah, but Michelle, for you, when you look at this and you see the key sectors and the key companies that the White House is focusing on, what should investors do in those stocks and in those companies? Is it time to go in and kind of back the administration, or should you stay away for now?
Well, in the case of Intel, as we saw, it dropped today after that. So I think that that company is in trouble, regardless of whether the United States now is the largest stockholder in it. So I think you have to weigh every type of deal individually. So, for example, knowing that the government gets some part of the revenue of Nvidia doesn't mean that you shouldn't own Nvidia. In fact, with earnings coming up, the projection for that is actually quite high once again, that they will come in and beat expectations and do well. So that's one thing, is that, there. But now if you're talking about something like wind and solar, even though there's been threat on solar and no tax incentives, that's kind of gotten a pass because the focus has been on wind farms, and those stocks have gotten hit. So I think it's a little bit of a pickup sticks in terms of, am I buying something that Trump is going to support? Is it going to work out? Is it a company that's in trouble? Is it something he's now going to badmouth? What is happening here? And that's kind of the best I can say, except if you look at the S&P and you look at NASDAQ and you look at the Russells and the Dow, today, after this huge rally we saw Friday, was nothing more than a digestion day. So far, the market is sort of brushing everything off.
Yeah, and the focus has really been on, as you mentioned, Nvidia's earnings that are out this week. Expectations are high. Its companies, its customers are still spending money. What do you think we need to see from Nvidia to move the market higher from these already high levels?
Well, I know there was a story that just came out right before about the H20, and that China now they're not going to trade with Nvidia in the H20 Act. And I think that maybe that would have some impact. But generally right now, they've just raised the expectation for revenues by $3 billion in revs to $48 billion, which is spectacular. So unless that has some kind of an impact in terms of the forward guidance, right now, I don't see any reason why Nvidia shouldn't continue to do what it's been doing. Even if we get a dip initially after earnings, if it's not a collapse, it looks like another buy opportunity. All the analysts came out today looking at $200 as the next stop for Nvidia, so we'll see. We own it, so we're hoping it's good.
Yeah, we'll watch that closely, but broader, Michelle. It's been a breather really after what we heard from Fed Chair Jerome Powell. What's next for the markets now?
Well, that I thought was so fascinating and actually so interesting that that news story kind of got buried today with everything else. It's a constant treasure trove of stories in the stock market. But what I really got out of that was something I kind of expected for a while, which is the 2% target rate for inflation may not be so realistic. And now with Powell saying that he was basically more concerned about the labor market than the inflation rate was a real pivot. So we'll see what happens. We have PCE coming out on Friday. I think if the numbers are much higher than what's anticipated, that could actually stop the potential 0.25% drop in September by the Fed. But again, this is another area where Trump has been extremely vocal. Maybe Powell is even a bit late in lowering the rates right here. And so at this point, I would think we would be looking at more the concerns about the economy than the inflation rate until inflation potentially goes out of control again. And then we'll have a whole other quagmire to deal with.
All right. Really appreciate it, Michelle Schneider, the Chief Strategist at Market Gauge. Well, we're headed for a break now. Stay with us here on Asia First.